Ladies and gentlemen, good day and welcome to the Indian Energy Exchange Q3FY22 Investors Conference Call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Kishore from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Rituja. Good afternoon, ladies and gentlemen. On behalf of Axis Capital, I am pleased to welcome you all for the Indian Energy Exchange Q3FY22 earnings conference call. We have with us the management team of IEX, which is represented by Mr. Satyanarayan Goel, Chairman and Managing Director, Mr. Vineet Harlalka, Chief Financial Officer, Mr. Rohit Bajaj, Head of Business Development, and Ms. Aparna Garg, Lead Investor Relations. We also have the entire management team. We will begin with the opening remarks from Mr. Goel, followed by an interactive question and answer session. Over to you, sir.
Good afternoon, friends, and welcome to the IEX earnings call for Q3 FY22. Happy New Year to you all, and I hope everyone is safe and healthy. Joining me today, I have Mr. Vineet Harlalka, Mr. Rohit Bajaj, Mr. Amit Kumar, Mr. Sang Gautam, Ms. Shruti Bhatia, Ms. Aparna Garg, and Mr. Akshit Gupta. Friends, the impact from the third wave of COVID caused by Omicron variant appears to be mild and short-lived, and there is no major lockdown and no significant impact on our economy. In India, we expect the economic and industrial growth to continue on a vibrant track. A mild correction has been seen recently due to COVID-19 surge and restrictions in certain part of the country. During the quarter, both services and manufacturing PMI saw good momentum. Manufacturing PMI in November 2021 recorded a 10-month high of 57.6, led by strengthening demand and improving market conditions as against 55.9 in October. The PMI, however, eased to 55.5 in December 2021. Even on the services side, we witnessed an increase in activities leading to services PMI rising to a decade high of 58.4 in October and then 58.1 in November 2021. The services PMI in December was 55.5. The second quarter of the fiscal 2022, India's GDP grew at 8.4% on a year-on-year basis. Growth was driven by strong exports and domestic private investment as businesses ramped up production to meet festive demand. India is likely to close this fiscal on similar note. For the full fiscal year 2022, the GDP is expected to be 8.3 year-on-year basis as per World Bank. On the power sector front, at the end of December 2021, India's renewable installed capacity is now 151 gigawatts. The share of the renewable in India's total capacity base has increased to 38%. This is in line with the recently held COP26 summit at Glasgow, where India announced an ambitious target of achieving 500 gigawatts of renewable energy by 2030. With a ramp up in manufacturing and industrial activity, the power consumption in the country in Q3 FY22 at 321 BU increased by 5% on 2 years CAGR basis. Key contributors in demand increased by industrial states of Maharashtra, where 18% increase happened, Gujarat 14% increase, Andhra Pradesh 12%, Telangana 12%, and Tamil Nadu 9%. Coal is a dominant source of energy, and we have been seeing that its availability has improved significantly compared to situation in October. Now, generating plants have started getting enough fuel to meet the growing demand of electricity. In the month of October, due to high demand and supply constraints from the domestic coal and also because of the high increase in the imported coal prices, The domestic coal inventory was only about 4 days, which led to increase in the price of electricity, and our prices increased to almost about 8 rupees per unit. However, with the increase in coal supply, the domestic coal inventory has now increased to 9 days in the month of December, and our prices in the month of November were about 3 rupees, and in December was 3 rupees 54 paisa per unit. On the regulatory and policy front also, a number of developments took place. A few highlights are: on 16th of December 2021, CERC has issued draft regulations for general network access. This will simplify, ease and clarify how transmission access will be available for participants on the exchange. Post-implementation of GNA, decision making by market participants to participate on the exchange will not be contingent upon transmission access and charges. GNA will promote development of power market in the country. On 16th October 2021, the 10-year long pending jurisdictional conflict related to power market between CERC and SEBI was resolved by Honorable Supreme Court, giving way for the introduction of much awaited long duration contracts on the power exchanges. This will also enable launch of electricity derivative on commodity exchanges. Electricity derivatives will smoothen out the price volatility, and also buyers will be able to hedge their position and take delivery in the spot market. I am sure this will lead to increase in the exchange transactions. Following this resolution conflict, IEX has also applied to CERC for approval of long duration contracts. The petition is under approval now, and we are expecting the approval in the next 2-3 months. Next financial year, we should be able to launch this contract. Additionally, CERC issued draft deviation settlement mechanism regulation and linking the DSM charges to the time block wise price discovered on the exchange platform. When implemented, this will help further expand and deepen the real-time market. The National Open Access Registry is likely to be implemented in Q4 of FY22. NOAR will automate processing of open access applications and will thus reduce its lead time. This will also make the transmission allocation more transparent and efficient. All these initiatives are favorable for further development of power market in the country. I am pleased to share that there has been several positive updates on IEX front in Q3 of this fiscal year. The Green Day-Ahead Market was inaugurated by Mr. R.K. Singh, Honorable Minister of Power and New and Renewable Energy, on 25th of October 2021. It now complements the term ahead contract for solar and non-solar energy within the green market. The collective auction of Green Day-Ahead Market is helping with competitive and efficient price discovery of renewable energy. Also, the Green Day-Ahead Market and term ahead market together providing a spectrum of choices to the market participants. The green market is expected to see even greater momentum and newer products going forward as penetration of renewable energy increases in India's energy mix. Under the Perform, Achieve and Trade Cycle 2, PAT Cycle 2, IEX commenced the trade of energy saving certificates on 26th of October 2021. However, Bureau of Energy Efficiency has issued an office memorandum on 29th of December indicating a temporary pause in trading due to some administrative issues, and we are likely to resume research trading soon. Trading in the REC market started on 24th of November 2021 after a 16-month gap and post issue of supportive and facilitative order by FTL and CERC. We have been seeing a very strong momentum in REC trading. Calendar year 2022 started on a very positive note for IEX. On the first day, cross-border trade with Bhutan commenced in the day-ahead market. Our cross-border electricity trade initiatives have begun with Nepal in April 21, and now Bhutan is also with us. We are also closely working with our key stakeholders in Bangladesh to garner their participation as well. These developments augur well for developing a large and well-leveraged South Asian regional power market in future. The Indian Gas Exchange has been achieving consistent growth in terms of volume as well as ecosystem development. In Q3 2021, IGX recorded trade volume of 3.6 million MMBTU.
The person you are speaking with has put your call on hold.
Sorry for that. Please go ahead, sir.
Hello. Yeah. In quarter 3 2021, IGX recorded traded volume of 3.6 million MMBTU, cumulatively trading 5 million MMBTU in this financial year. I am delighted to announce that IGX has achieved break-even in quarter 3 of FY22 within 1 year of authorization. We are pleased to also share that IOCL has joined IGX as a new strategic partner. With the increasing volume and participants, IGX is well on its way to contribute substantially towards the government's goal of achieving 15% share of country's overall energy mix for natural gas by 2030. On a standalone basis, revenue for the quarter increased by 32.4% from 95.7 crores in quarter 3 of FY21 to 126.7 crores in quarter 3 of FY23. The PAT grew by 33% on year-on-year basis with a margin of 63.1%. The company has announced an interim dividend of 100% per equity share. During the quarter, traded volume on the exchange grew by 37% year-on-year with 27.6% BU volume traded versus 20.1 BU in quarter 3 of FY21. The growth in volume was driven by an increase in electricity consumption as well as resurgence of trading in REC and ESCerts. Gujarat, Andhra Pradesh, Punjab, Maharashtra, Haryana contributed the highest to exchanges electricity volume. The real-time market continues to be one of the fastest growing market segment on the exchange with a contribution of 20% to the overall electricity volume. RTM witnessed 4.8 BU of volume, registering a growth of 70% on year-on-year basis in comparison to quarter 3 of FY21. The consistent growth of real-time market is an indication of growing reliance of distribution utilities and industries to achieve power demand supply balancing in the real-time market in most efficient manner. The green market, including the day-ahead and term-ahead market, cumulatively traded 1.2 BU during the quarter and contributed 5% to overall electricity volume. On the REC front, a total of 38.28 lakh certificates and a total of 2.86 lakh energy saving certificates were traded during the quarter. We are now gearing up for the launch of much-awaited long-duration contracts in both electricity and renewable energy. We are also working on other new initiatives such as exchange-based ancillary market, capacity market, as well as cross-bidding contracts. The power sector is undergoing a significant change with greater focus on sustainability, and this has been redefining the industry outlook. The demand for electricity is expected to continue to grow. At IEX, our constant endeavor is to innovate, improve technology and introduce new market segments and products to help the market participants meet their fast-changing requirements. Besides that, we are continuously assessing new opportunities that are unfolding. Thank you, everyone. We can now start the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good afternoon, sir, and congratulations on a very, very good set of numbers. So my first question is on the gross bidding. How do you see this gross bidding changing your volume, the behavior of DISCOM and incremental volume as you see, from FY23 onwards? And secondly, on the MBED, is any update which you can share? Has CRC started implementing that? The last question is on ESCert. Why is there was no trading from ESCert in December, and do we maintain the projection of 3.3 BU which is expecting in ESCert in this particular financial year? Those are 3 questions. Thank you.
Yeah, thank you, Mohit. Let me first discuss about MBIT. Government of India has sent a discussion paper to CRC, because it is CRC who have to frame rules and regulations for implementation of MBIT. Are you able to hear me? Hello? Hello?
Yes, we can hear you, sir. Please go ahead.
Yeah. So CRC has to now take up the activity for framing draft rules regulations for implementing MBIT, and once they finalize that, then only MBIT will be implemented. So I will not be able to tell you any timeline for that. Gross bidding, MBIT is mandatory market, but we devised a product which is gross bidding, which is a voluntary market. See, in case of MBIT, power under PPA was to be sold through exchange and distribution company to buy power from exchange. The same thing distribution companies can do on voluntary basis also. Suppose the exchange clearing price is 3 rupees per unit. So what they can do is, the power plants whose variable cost is say from 2 rupees to 3 rupees 50 paisa. Below 2 rupees, they know in any case they will need to schedule that power. So they can directly schedule that power. But from 2 rupees or 2 rupees 50 paisa to 3 rupees 50 paisa variable cost plant, they can sell that power on the exchange platform and buy power from the exchange depending on their requirement for their different time block. This is a voluntary mechanism, and by gross bidding, they can achieve whatever Government of India wants to achieve through the MBID process. And I'm sure through this gross bidding also they will be able to achieve that efficiency and merit order dispatch. So we applied to the regulator for approval of this product. Again, stakeholder discussion is going on for this, and we are expecting approval maybe in the next 3-4 months from the CRC. As far as ESCert is concerned, BEE has temporarily put a hold on the trading of ESCert. I think there are some administrative reasons for that, and once that is resolved, then it is expected that the ESCert trading may start from the next month.
Understood. So thank you, sir. Thank you.
Thank you. Thank you, Mike.
Thank you. The next question is from the line of Devansh from SIMPL. Please go ahead.
Yeah, sir. Thanks for the opportunity and congratulations on good set of numbers. Sir, couple of questions. One is in case of gas exchange, after the recent stake sale, have we complied with the ownership norm that I think below 50% was where we were supposed to comply, and there was also a discussion regarding the same. So if you can just throw some light over there.
Yeah, I mean, after sale of 4.93% stake to IOCL, our IEX shareholding in IEX is reduced to 47% now. And now IEX is not a subsidiary company of IEX, it is an associate company of IEX.
Okay. And will there be any further selling in stake?
No. As of now, we don't have any plan, because we wanted the strategic investors, strategic stakeholders of the gas sector on board, so that together we can develop the market. And I think we have done that. We have today ONGC, GAIL, Indian Oil Corporation, Torrent, and Adani with us. I think these are large stakeholders in the sector.
Okay. This is it from my side. Thank you.
Okay.
Thank you. The next question is from the line of Ankush Agrawal from Surge Capital. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. So firstly, again on the embed, so the first wave was supposed to get implemented from 1st of April of this year, right? So even though like you are saying that CERC has yet to frame the rules, but what is the progress like? Have there been any kind of discussion between the industry participants till now?
To best of my knowledge, nothing like that. So April appears to be difficult. Let's see.
Right.
It all depends on the action by CERC.
Alright, but so given that, do you think it is feasible that since it's just 2 months pending from the date of implementation, it would be possible to do that?
No. There are a lot of things to be done. Because it amounts to amending couple of regulations, making a framework for this, making a clearing and settlement arrangement for that, and then you will have to also do mock drill for that. So I think a lot of work is to be done before implementing this.
Right. So, in your expectation that it won't happen from April of this year, right?
No.
Right. Okay, got it. So secondly, on this stake sales in IGX, right? So selling stakes to say GAIL, IOCL, Adani, that is understandable that these guys are strategic partners in the gas economy. But I want to understand the reason for selling such huge stake of 26% to NSE, right? Because NSE, I am not able to understand what value they bring. I mean, we have more experience than NSE in running a delivery-based commodity exchange, right? So if you can highlight what was the reason behind selling stake to NSE?
I think it was mainly because NSE is a large exchange in the country, the largest exchange in the country, doing a commodity. I mean, not in the spot market, but then they have large reach in the market, and we decided to take them as a strategic partner, and we are definitely getting a lot of value in the process. And also, instead of having multiple exchanges competing with each other, it is good to have one exchange and work together in the market.
Right. So it was more on the competition side, that is what you're saying?
Yeah.
Right. Got it. Fine. That was all. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Swarnim Maheshwari from Edelweiss. Please go ahead.
Hello, sir. Good afternoon, and thanks for the opportunity, and congratulations for good set of numbers. So first question, if you just see, how does this general network access work? Do we mean that this will actually, once implemented, we will get rid of the open access charges which are levied by the state?
Yeah, general network access is very, very friendly, market-friendly regulation. Under this regulation, distribution companies will have to take general network access on long-term basis, and as long as the transactions are happening within the quantity, within the access and they have taken, then they don't have to pay any other charges. I mean, suppose for a state of UP, they have taken general network access depending on their seasonal requirement and the peak demand for 10,000 megawatts. And what they are getting power from under the long-term contract is only about 8,000 megawatts. So they can buy 2,000 megawatt power from the market, from the exchanges, without paying any additional network charges. Earlier, they were required to pay charges for the short term also. Now they are not required to pay that. So that will be one positive thing. Similarly, if they are selling power, then also earlier they were required to pay charges for selling in the network charges. Now they are not required to pay the charges. So it is only the buyers who are required to pay. Earlier it was buyer and sellers both were required to pay the charges. Now it is only buyers who will have to pay it. So it is making the process much simpler. There is also a provision for short-term general network access. If anybody has seasonal demand for maybe 2-3 months time and he wants to take additional access, depending on the availability, that can be given to him.
Right. So essentially, sir, this talks about the reduction or elimination of the excess charges or the transmission excess charges, not the open excess charges, which are two different things. Is that right?
No, I think transmission charges and open access charges, all these things, all these regulations will be now merged into this GNA regulation.
But sir, we believe that this open access charges is more of state prerogative, isn't it, sir?
No, state prerogative is intra-state charges.
Okay.
GNA is for interstate charges.
Interstate. All right.
Yeah. So interstate charges are going to be rationalized. But intrastate, as of now, they will continue as it is. Maybe in future, in states also taking a lead from this GNA, then also start rationalizing that.
Okay, got it. Sir, secondly, on this gross bidding, now I just wanted to better understand, are you trying to say that this once implemented, and of course it's a voluntary mechanism, but if it is implemented, does this circumvent embed by any chance? Is this what we need to do?
Yes. We are confident that if gross bidding is implemented effectively and used by the states effectively, there is no need of embed.
There is then no need of embed at all. Okay.
Yes. You can achieve the same kind of efficiency through this gross bidding mechanism.
Okay.
Yeah.
All right. Sir, will there be any kind of draft or some sort of regulation that's likely to come, or has it already come on gross bidding?
No, for gross bidding, we have applied to CRC for approval of this product. Because when there is a regulatory approval, then the acceptance by the market participants is much better.
The person you are speaking with has put your call on hold.
Hello.
Yeah.
Yeah. So once there is a regulatory approval, then the acceptance by the market participants is much better. So we are waiting for the CRC approval. CRC has heard the petition. They said, please do the stakeholder consultation and let us know the views of the stakeholders. So we are working on that.
All right. Well, thank you so much, sir. I've got more questions. I'll get back in queue. Thank you.
Okay. Thank you.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital Limited. Please go ahead.
Thanks for the opportunity. The first question is, the total backlog of REC is yet to be redeemed is about 65 million odd. So do you see a potential for a pickup in the pace of, say, the quarterly run rate of REC trading that we are seeing? Because, there has been a big backlog which has got accumulated over the last few months. The trading was halted.
Yeah, demand for the REC is definitely much higher because there is a backlog of 2 years. And if you look at the RPO compliance also, there is shortfall in that. But REC inventory is going to be a limitation now because new capacities are not getting added in this scheme. So whatever capacities were there under the REC scheme earlier, they are continuing. So every year almost about 50-60 lakh RECs are issued and trading is happening for that number of RECs. So since for 2 years trading had not happened, so this year we expect almost about 1 crore REC trading.
Okay, and IEX should be able to garner a decent market share of this.
Yeah, definitely.
Okay. So could you also speak about the timeline of launch of electricity derivatives by MCX from here? Also elaborate on the role of IEX, the revenue sharing arrangement that is likely to be between IEX and MCX. What quantum of derivative contracts will come up for physical settlement on exchange? If you could please elaborate on the whole, electricity derivative story.
Yeah. First of all, let me tell you one thing. That there was a dispute between SEBI and CRC about regulating the electricity contracts, delivery contracts, and the derivative contracts. The reason behind this was that electricity regulator was quite apprehensive of electricity derivatives. Electricity derivatives may have adverse impact on the spot market. So when this issue was discussed and the committee discussed about this thing. So it was decided that let there be a joint working group of SEBI and CRC, and this joint working group should look into the kind of derivatives which are going to be launched and what kind of impact it will have in the spot market. So a joint working group has been already constituted. They had a couple of meetings, and they will, and what I understand that these commodity exchanges have already applied to the SEBI for approval of the derivatives. So they are looking at that. So what kind of derivatives, which particular product can be approved to start with. So I think within this financial year, the approval should come.
FY22 itself.
Yeah, FY22 itself, they should start. So that is my estimate. But then depends on the joint working group. But it will start definitely shortly. There are no hitch in that. Government and regulators both want to start these activities because this will deepen the market. And as far as our role in this market is concerned, see, number one, when electricity derivatives are launched, this will definitely smoothen out the price volatility on the spot market. And this will also provide an option to the buyers for hedging their position in the derivative market and take delivery in the spot market. What we understand from the international exchanges, whenever these derivatives are launched there, the liquidity in the spot market increase significantly. So we expect the same thing in Indian market also. And we have an arrangement with MCX because MCX will be launching the contract delivery price. And we have, as you pointed out, that we have a revenue sharing arrangement with them. So as and when these products are launched, then they will start the trading of that, and then we will see what kind of volume happens there in that.
Sure. Thank you so much for answering my question.
Thank you. The next question is from the line of Suraj Navandwar from Sampada Investments. Please go ahead.
Hello, sir. Good afternoon. Sir, I wanted to understand our customer and supplier concentration. Like how much of our volumes are contributed by, let's say, top buyer or top 5 buyers, and how much of our sell side volume is provided by top seller or top 5 sellers?
Just a minute. There is definitely some concentration because there are few states, who are if you add the power consumption of the states of Gujarat, Maharashtra, UP, Tamil Nadu, these 4 or 5 states itself will be contributing to 50% of the consumption of the whole country. So naturally, on the buy side also there will be going to be concentration because they are the big buyers. So top 10 buyers are constituting almost about 58%.
Okay.
58% of the total buy, and top 10 sellers are almost about 56% of the total sell.
Okay. And sir, how much do we charge for renewable energy certificates? Like we charge 2 paise each from buyer and seller for the per unit. So what are the charges for the green market and renewable energy certificates?
On the certificates, we charge 20 rupees on either side.
20 rupees on per certificate?
20 rupees from buyer and 20 rupees from seller.
Okay, okay. And on the green TAM and DAM?
It is same as the conventional market. 2 paise on either side.
Okay, okay. And sir, what would be our volume growth X of the new products? Like last year, the same time, we did not have the green day ahead market, or we did not have renewable energy certificates. So what would be our volume growth X of these products which were not traded last year same quarter?
Just a minute. See, our third quarter electricity volume growth is 17%, only in electricity, and after taking REC and research, it is 37%. And out of this 17% growth, the growth was mainly because of the RTM. RTM, we had significant volume increase, and then also because of the DAM market. In DAM market, our increase was 4%, but in the RTM market, the increase was 70%. So you can say the new products have given significant volume increase.
Okay, sir. Thank you, sir.
And GTAM, GDAM, in that market also, last year it was about 0.5, and this year it is about 1.2 BU. So there also there is a good jump. Green market, I'm sure in the future also we will continue to see good growth in this market.
Right. Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Siddharth Gupta from Yogar Capital. Please go ahead.
Good afternoon, sir. I had the opportunity to look through the investor presentation that was uploaded on the BSE website, which, according to some analysts, predicts about a four-time top-line growth by FY24. But my question is pointedly about the fact that we have two power exchanges coming into operation in the next financial year. One of which is PTC Indian backed, which provides a lot, which is a market maker on our exchange. So could you please comment on what is the expected effect on our revenue projections or our margins due to these particular exchanges coming into play?
So as of now, there are already two exchanges, IEX and PXIL, and next financial year we may have third exchange, which is Pran Urja or IEX. I think the new name is here talking now. So which has been promoted by BSE. So that may be there. I don't see any challenge in that. I mean, we are already working in a competitive market right from the beginning. There are two exchanges and we are competing with each other. So in spite of that, we have been able to maintain significant market leading position in the market. So even with the new exchange also, I'm not really concerned. So the point is, what we have to do is provide an efficient technology platform to the market participants. Innovate, provide new products, understand the requirement of the market, and provide new products. And I'm sure if we are able to provide that value, customers will stick to us. We are upgrading our technology platform also, going to go ahead with the web-based system to provide the ease of doing business for our participants. So all these things are going to provide a lot of value to our market participants. We are also working on data analytics to help our customers to do efficient bidding. So a lot of initiatives we have taken. I'm sure with this we will be able to deal with the competition.
No, sir. I appreciate the effort you're taking to retain the market share. My question was just about what is your internal projections or estimates with regard, even in the most conservative way, as to what volume degrowth, if at all, we see over due to the existence of the new exchange or any fall in margin. And secondly, sir, I would like to know what share of PTC India's business do we handle currently, and do we see an outflow in the future because of their own exchange coming up?
Friends, in the earlier Concall also I have said the same thing. When we do trading of shares, goes through a Zerodha platform, who decides from this particular exchange you want to buy, BSE or NSE? Who decides that? It's not Zerodha platform. It is the buyer of shares who wants to decide, or seller of shares who wants to decide whether they want to buy or sell. He has to give that option. Not Zerodha or ICICI.com or direct or other platforms. Similarly, in case of the trading company, it is the trader who decides whether they want to sell or buy. It is the buyer or seller of electricity. They have to decide where they want to do it. And for a buyer and seller, electricity, is a commodity which is a perishable commodity. For a generator, if electricity is not sold, the opportunity is lost forever. He cannot store the electricity and sell it tomorrow. So he will like to sell the electricity on an exchange platform where there is liquidity, where he knows that buyers are there. And same thing is for the buyers also. So I am very sure that there is not going to be any impact of this. And we will deal with the situation as it emerges. I don't see any challenge in that.
Okay. Thank you so much, sir. Thank you for your comments. Thank you.
Thank you.
Thank you. The next question is from the line of Apurva Bahadur from Investec. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, I wanted to understand on this cross bidding. Now, correct me if I'm wrong, but what will be the incentive for states with low variable cost power to place their power on the exchange, right? Because my understanding is that even in embed, this was a bone of contention, wherein states with excess or with coal reserves were not very keen on letting go of their ability to schedule power even on the before gate closure. So can you please help us with that?
The states who have allocation from the low cost power plant and does not have demand to utilize the full allocation, they can sell that power on the exchange platform at the exchange clearing price and take advantage of the low variable cost power. Presently, most of the states what they are doing is they are not scheduling that power. That power remains unscheduled. Under this block bidding mechanism, they will be able to sell the power and take advantage of the market clearing price. If the market clearing price is more than the variable cost of those plants, they can make some gain out of that.
Okay. And so this will happen on day ahead basis or RTM?
Yes, this will happen. This will happen on day ahead basis, mostly on day ahead basis.
Okay. So in case there is a last minute demand increase for these plants, they will not be able to reschedule that power. They will have to buy on exchange.
Then they have the option of RTM market. And when you participate in the market, you can fine tune your bidding strategy. You know what kind of variations can take place, how much of power I should take for the intraday variation, and how it's going to be the RTM market. Can I depend on that or not? To what extent I can depend on that? All these things, when you participate in the market, you fine tune your strategy. So I don't see any issue in that.
Right, sir. Fair enough. So one last question on this, and this is something which we saw when there was a coal shortage in October as well, that the central government started issuing directives that states should not sell power and try to gain from an opportunistic thing, and rather than conserve coal. So generally the idea is, since more or less we have times of coal deficit, do you think if this is not mandatory and it is voluntary, the sanctity of exchange market will prevail even when there is a time of coal tightness for these low variable cost power plants?
So number one, this kind of situation happens maybe for 10-15 days in a year. It don't happen throughout the year. And second is, I personally believe that we should not tamper with the market. We should allow market to operate freely. A state which has got less demand and more power availability, if they have the option to sell, they should be allowed to sell, because they are also buying power when the rates are costly and the demand is high. So we should leave it to them. And if suppose that power availability increases in the market clearing price also will go down. It will help the market.
Agreed, sir.
Anyhow, that situation was for 15 days. In the first 15 days of October, and in the second 15 days of October, the rate came down. Month of November, the rate was only about 3 rupees. So that situation was just for 15 days.
Sure, sir. any inkling by when we can expect the regulator to act on this, or any timelines for this, sir?
No, they have asked us to do the stakeholder consultation, and it will take, I think, 3-4 months time. After consultation, we will file, and then they will have hearing, and I think they will also have to see what kind of products to be approved.
Sure. And this becomes redundant if embed is implemented anyway.
I will say if this is implemented, embed will become redundant.
Okay. Okay. Sure. So I'm looking forward to it. Thank you so much. Thank you for your time.
Thank you.
Thank you. The next question is from the line of Prashant Rane from Exclusive Advisors. Please go ahead. The next question is from the line of Prashant Rane from Exclusive Advisors. Please go ahead.
Hello. Hello.
Mr. Prashant Rane, please go ahead. Your line is unmuted.
Hello. Hello.
Hello.
Sir, please give me a moment. There is no response from the line of Prashant Rane. As there is no response from the participant, we'll move to the next participant, which is the next question, which is from the line of Uday, an individual investor. Please go ahead.
First of all, good evening all, and congratulations for the best result ever. Can you hear me?
Yeah, I can hear you.
Yeah, from the results which I can see, there is a significant expense increase in the other expenses, which is approximately double of previous quarter as well as previous year quarter. So, can we have some light on that?
Vineet, would you like to?
Yeah. I'd just like to confirm, because this quarter we come out with a bonus issue. So mainly the increase of the expenses were on the two accounts. One, the higher CSR expenses and the bonuses. So a lot of regulatory fees and other things, stamp duties need to pay. So these are the two reasons for the higher cost. Otherwise, the other administrative costs are more or less in line with the previous quarter.
So from next quarter, can we stick with the same like previous quarter and previous?
Yeah, 5.5 years. That is our trend.
Okay, fine. Thank you. That's all from my end.
Thank you.
Thank you.
Thank you. The next question is from the line of Vikas Srivastav, an individual investor. Please go ahead.
Yeah, my question was on the gas exchange. If you could throw some light on the volumes, is it breaking even? How is it looking? That was one question. And other, with your stake down below 50, does the profit of the gas exchange, as and when it happens, will it get consolidated with the holdco?
Yes, consolidation is, it depends on us. But as far as the numbers of gas exchanges is concerned, let me tell you one thing. First quarter of this year, gas exchange did a volume of about 3.3 lakh MMBTU. Second quarter, they did about 10 lakh MMBTU. Third quarter, they did 36 lakh MMBTU. Every quarter, they are almost multiplying their volume by 3 times. This is a lighter part of it. But the volumes are increasing. And I'm sure with the increased participation of the participants in the gas sector, the gas exchange is doing very well and the volumes are going to increase further. In the third quarter of this year, for the first time, IEX has done the break-even and made a profit of 0.8 crore rupees.
Oh, thank you. That's very impressive. So you do expect the exponential growth in the gas volumes going forward too?
Yes, definitely.
Thank you so much. That was all. Thank you.
Thank you.
Thank you. The next question is from the line of Abhilasha Satale from Dalal & Broacha. Please go ahead.
Yeah, thank you for taking my question. So my first question is on the DAM volume. So we are seeing, the RTM growth is substantially higher, whereas DAM volume growth has slowed down, from whatever the highs we had. So is it that RTM is cannibalizing DAM? Those two products are complementary to each other, or so how do you think this trend going forward? This is my first question. And second is, with the third exchange coming in, we are leaving the charges which are highest band of the CERC approval charges. So do we have any intention to reduce that as the competitive intensity increases, or how do we see the charges trend going ahead as volumes increase substantially? Thanks.
Yeah, in the first 9 months of this year, we have achieved electricity volume growth of 37%. And electricity is electricity, whether it is purchased in DAM, TAM, RTM, green TAM, wherever, So it is the total electricity growth, volume growth. Participants are trying to optimize different products. They are trying to optimize the cost and the requirement, meeting the requirement through these different products. It was expected that with the launch of the RTM market, maybe some of the demand will shift to the RTM market because they will be able to more accurately forecast the demand during the day and purchase that power instead of buying it day-ahead basis. So, whether it is cannibalizing the RTM day-ahead market, that is difficult to say, but definitely RTM market participation has increased. And going forward, I think you will see further increase in the green market. The green market which was lost last year in GTAM and this year GDAM. In these two markets, presently the volume is slightly lower, but the participation is further going to increase in these markets also. So at that time you may see that the DAM volume growth is further impacted. But to us, volume has to come from all these products. As far as transaction fees is concerned, we are working in the market based on the value which we are providing. And this participation on the exchange platform is dependent on that. So our job is to continue to provide value to the customer. And I believe that the transaction fees which we are charging is much lower in comparison to the value which we are providing them. So we have no intention to compete based on the transaction fee.
Okay. Sure, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Swarnim Maheshwari from Edelweiss. Please go ahead.
From gross bidding again. Suppose that this gets implemented, what about the transaction fees? Will it be similar to all the other products, or will it be regulated in a different manner?
It will be difficult to answer that today because it depends on the quantum of volume which is coming. It depends on the volume. So if a state is bringing significant part of the sell and buy volume on the exchange platform, then maybe we can think about different charges for the gross bidding. Because he is for selling 100 MU and buying 60 MU. So then effectively he is selling 40 MU. So we may have to think something about that. As of now, we have not decided anything on that. So let the product be approved, let participation happen and start, and then we can think about that also if required.
Okay. But do you see a real case for it to get started in FY23?
That is our target. We are working on that.
All right. So thank you so much and wish you all the very best.
Thank you. Thank you.
Thank you. The next question is from the line of Vikas Kasturi from Focus Capital. Please go ahead.
Hello, good afternoon, sir. Sir, I just wanted to, so recently you sold about 4.93% stake in IEX to IOCL. So when I did the calculation, it came to...
I'm getting slight echo and not able to...
I'm sorry, sir. I'm sorry. My apologies, sir. I hope I'm audible now.
Yeah, much better.
Yeah.
Much better.
Yeah. So, sir, recently you sold 4.93% stake in IGX to IOCL. So that was at a valuation of somewhere around 75 crores, if I'm not wrong. So my question is, sir, in your own words, you said that every quarter the volumes on IGX has been growing. In fact, it's been growing exponentially, and and in the future it could have the same kind of growth that we could see that we have seen in IEX. So, sir, don't you think just for 75 crore valuation was little on the lower side?
See, last year when we started this gas exchange, at that time itself we decided to have some strategic partners with us. And we decided who are those partners going to be. It was not an offer made to everybody. We decided whom want to give that. And because we felt that yes, they can bring a lot of value to the exchange. So IOCL was there in the list. We offered them at that time. Only thing is there was slight delay from the IOCL side to give the confirmation. We have sold this equity to all the participants. It is ONGC, GAIL, IOCL, Torrent and Adani at par. We are selling at par. It is basically not a sell, it is an investment, strategic investment by all the participants. So it has been that way. I know very well that there were a couple of private equity investors who were willing to offer much higher valuation to us. But no, it is not a sell. It was a strategic investment. We wanted strategic investors in the company.
Okay, sure, sir. Thank you. That's all. No more questions.
Thank you.
Thank you. The next question is from the line of Aniket Mehta from Invest Research. Please go ahead. Aniket Mehta, please go ahead with the question. Your line is unmuted. May we request Mr. Mittal to unmute yourself if muted from your handset. As there is no response, we'll move to the next question, which is from the line of Ankur Agarwal from Phillip Capital. Please go ahead.
Hello, sir. Thank you for taking my question. Just coming back to gross bidding, and please pardon my ignorance. I just basically wanted to understand what is the difference, or rather, what would be the benefit of gross bidding compared to the current mechanism that we have. If you can just explain that briefly, that would be very helpful. Thank you.
Presently, a state, suppose they have allocation from the different power plants and they have PPA with the different IPP. And the total quantum available with them is suppose 10,000 megawatts. And the demand during the day is not constant. It is sometime maybe in the evening peak hours it is 11,000 megawatts, maybe during the night hours it is 8,000 megawatts, daytime it is 9,000 megawatts. So what he is doing is he is giving schedule to the generator accordingly. And whenever the demand is lower than the total allocation from this plant, a part of the capacity is remaining unscheduled. This is remaining unutilized. Whereas the exchange clearing price at that time, even in comparison to the power plants which are unscheduled, may have been higher. So the state could have sold that power on the exchange platform instead of not giving schedule to them. So instead of, if you want to do this fine tuning by scheduling directly to the state and then partly selling on the exchange platform, it becomes slightly difficult. So what you can do is, power plants having variable cost less than 2.25 rupees, definitely the state will need 100% of that. So they can schedule that power directly to the state. But the power plants where the variable cost is 2.25 to maybe 3 rupees, 25 paisa, in these plants, depending on the requirement, the schedule will be varied. So instead of varying the schedule, they can sell that power on the exchange platform, those plants. They can schedule them, sell the power on the exchange platform, depending on the exchange clearing price, and purchase their requirement from the exchange utilizing day-ahead market and RTM market. So they can fine-tune their purchase to meet the demand. So they can utilize this platform for making money by selling unrequisitioned power and also meet the demand efficiently.
Okay, sir. That's it.
Thank you.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
So two questions. The first is one clarification. Does behavior of private discoms utilizing these new innovations like cross bidding should be higher in your opinion versus discoms owned by the state?
I agree with you, but I find these days even state discoms, their power purchase optimization also has improved significantly, particularly in states like Gujarat, MP, Telangana, Andhra Pradesh, UP. There are many such states, who are also optimizing their power procurement cost. And I'm sure they're
So do you see any significant improvement by the states in optimizing their power costs compared to, let's say, 5 years back? And do we have any role to play in that in terms of consulting or something? Is it possible?
Mohit, I can tell you one thing. There is a lot of change. Lot of change if you compare in the last 5 years. States like UP, they were not buying or selling on the exchange platform. They were not participating in the exchange platform. They were getting into only the long-term and the short-term contract, paying high price. Today, UP is buying power also when they need it, and they are selling power also whenever they have surplus. Yes, they are under the PPA, the variable cost is lower, and they are selling from the exchange platform at higher cost and making money in the process. And same is the case with the other states like Telangana, UP, Andhra Pradesh, Karnataka. But there are many states. And it is happening because my business development team, they are continuously interacting with the states, their power procurement team, telling them how they can utilize this exchange more efficiently, how they can do the bidding, how can they improve upon their bidding strategy. So there are different tools also which have been developed. How can they use those optimization tools to optimize the cost? All those things are being done now.
And so lastly, on the dividend policy, given the fact there is no major capital expenditure lined up in the near future, do you expect the dividend to go up in FY23 and FY24?
See, we have been giving more than 50% of our profit in the form of dividend. That has been the consistent policy of the company. So we intend to maintain the same. And maybe if there is no need of money, and there is no point in keeping money with the company, maybe in future, if we feel we can increase the dividend also.
Understood, sir. Thank you and best of luck, sir. Thank you.
Thank you. Thank you, Mike.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments. So would you like to give any closing remarks?
Yeah, thank you very much for participating in today's call. I must say that energy markets have been playing a pivotal role in building India's sustainable and efficient energy future. We are very excited about the prospects of the company and the new opportunities that will unfold. I look forward to a positive interaction with you all in the next quarter, just like this one we had. Thank you very much.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.